dividends get paid out while you're short, you're going to be responsible for them. All right. Most of the time, Sandy, the answer is yes. The question was, can you short all stocks? Most of the time. Sometimes the regulators will get involved and they'll put a freeze on something. And boy, I hate that. You're going to learn I don't actually short that much. I typically trade with options, but I just hate it when regulators get involved, period. But most of the time, Sandy, you'll be able to. There's going to be some limits. Typically, during an IPO, there are limits in terms of what shorting can happen during an IPO. By the way, that's one of the reasons we see extreme volatility during IPOs, because people can't sell. So that's one of the reasons for that. But typically speaking, Sandy, most stocks are going to be shortable. Yeah. Jose asks an interesting question. Jose says, do you have to play both in order to get a profit, meaning long versus short? Jose, you're going to trade a long trade for a bullish situation and a short trade for a bearish situation. You do not want to you don't want to do both at the same time. That would be an offsetting trade, and it would not give you profit. So you wouldn't want to do them at the same time. But if you want to make money in a bear market, one way to do that is by shorting the stock. There are other techniques and strategies, which I will teach you at a later time when we get into options, Jose. But in terms of stock itself, if you're trading the stock itself, a short trade is the only way you can make money as the stock goes down. Now, again, there's option trades that you can make money while the stock goes down. But in terms of stock itself, the short trade is the only way you can make money while the stock is falling. Okay? Al, I really don't have any feedback on that. His question has to do with shorting foreign stocks. I really don't have any feedback on that. Sorry. All right, let's talk about the trade setup, and then we'll do some more Q&A at the end. If you think of another question, you want to type it in there at the end of the class. I'll be happy to do some Q&A with whatever time we've got left at the end. Let's talk about the trade setup. Here's how the trade setup works, and this is really simple. I mean, what I'm hoping to do here is I'm hoping for you guys to see that when we break the trading process down to its most fundamental elements, trading itself does not have to be complicated. It's just a series of processes and a series of order types that we put into place. And so what we've now learned between the last class and this class is we need to go pick a stock. Which stock is it? It really doesn't matter. We can chart any stock we want. And so we're going to pick a stock. We're going to analyze the chart. And we're going to do that with our support and resistance that we started learning about in the last class. We will learn more about support and resistance, but that's what we're going to start with. And then once we've used our analysis, we can pick a direction. If the stock's pulling away from resistance, well, it's probably a good candidate to sell short. If the stock is bouncing up off of support, it's probably a pretty good candidate to buy stock or to buy long. And that, of course, is where the strategy comes into play. So we can walk through this very basic process. Pick a stock, any stock, I don't care. Pick a stock, analyze the chart. Where's my support and resistance? Are we moving up? Are we moving down relative to support and resistance? And if we're moving up, what's the strategy? Long for bullish and short if we're moving bearish. All right. So let's go do that. Let's get over here to Trade Navigator and just kind of walk through a couple of these processes. Now, let me get to a cleaner chart, something that's not been as volatile. Let's see where Home Depot landed today. I think this is a great one. All right. So Home Depot has had 4 days of a bullish rise now. And as we look at Home Depot, you don't know much about the rest of the analysis process yet. I will teach those things to you. But based on what we know so far, the stock has rallied back up into resistance, and we closed today at resistance. Do you think we could make a pretty basic argument that if Home Depot keeps going higher, it's probably a bullish trade, and if it reverses right here where it is, it's probably a bearish trade? Do you think we could make that argument here? I think we can make that argument. Yeah, that's a pretty obvious argument. So let's do that. Let's take our little trigger signal here, and we're just going to draw a line here, and we'll say if Home Depot continues bullish above about 95.86. In fact, I'll move that a little bit lower here. Let me make it a little bit thicker so you can see it. Let's pull it down to about 95.57. If Home Depot keeps moving higher at about 95.57, I'm going to buy the stock. Based on what you have learned so far, that would be logical. Okay, now there's more that we will get into in terms of these things, but just based on what we've learned so far, that's a pretty logical trade. And if Home Depot does not continue higher, but instead it turns around and starts to head bearish here, is this a logical spot for Home Depot to turn around and head back down to about $88 or $86? Is that a logical spot for that to happen? I think it's a pretty logical spot. So let's tighten this up a little bit, put it about right here, about 91.28. We'll turn this one red because that'll be our bearish trigger. And now we've basically got a pretty simple trade set up. If the stock goes up, we will buy. And if the stock goes down, then we will sell at about 91.28. And we'll have targets down here about 88.50 with a secondary target of $86. Does that make sense to you guys? Now, Leon is asking, how do you come up with 95.57? Leon, I will teach you more about this, but in its most simple explanation, I'm going to tell you an answer that you don't like. And here it is. It's not scientific. It is visual. What you're going to learn is as stocks trade up into a resistance area, there's a certain amount of kind of threshold in here that's kind of the intraday volatility. And we want to set our triggers outside of that. The reason I put 91.28 is because I could anticipate that tomorrow I could see Home Depot maybe trading something like this, and then the next day doing something like this and keep going. And so I want to allow for that intraday volatility. Every stock is going to have a certain amount of intraday movement. And on average, it's going to kind of have about an average movement. In the case of Home Depot, it's a couple of dollars. And so we're not going to want to put a trigger exactly on the price point where it currently is, Leon, because that means that there's a high chance of a false trigger where we will get triggered into a trade we don't want to be in. So I use a visual, and this is a skill set that I'll teach you to develop more, but I just visually look at this and I say, okay, I don't want to set it here because that's too close. I kind of give it a little bit of room here, and by the time it breaks out of here, that's about the price that it needs to be. I've done a lot of these, Leon, and I've kind of honed that skill pretty well. But you're going to find that you will hone that skill as well as you practice what I teach you. Okay? So that's where that price point came from. Let's do another one here. Let's come through. Let's look at Netflix. This is Netflix currently. Of course, Netflix a couple of weeks ago, well, not a couple of weeks ago, last week, had a huge gap down, and you can actually see my trade setup from Power Trader, Leon. Leon, this is a really great example of why we don't set our triggers exactly where the price is. Notice what happened yesterday with Netflix. I'll zoom in so you can really see this, Leon. Do you see this upper shadow to the candle? You see how high it went, but it did not get to my trigger. My trigger is at 370.25. That's my bullish trigger that we set up in Power Trader. And so my instructions in Power Trader were if the trade keeps going above about 370.25, then we're going to trade up to about 388, followed by a move to about 425. These are our two targets here. Okay, but you notice we didn't trigger that yet, Leon. And so that's really important to see. The reason we give it some room is for that intraday volatility. So now we've traded 2 days and not gotten above my trigger here. On the same token, we don't want to set a bearish trigger too tight. If I set my bearish trigger right here, well, last Friday, we would have been triggered into that trade. And so the bearish trigger on Netflix right now is only if Netflix can go below support and continue below about 327.04. And at that point, we'll continue with the trade. Does that make sense? In the meantime, what are we going to do? We're going to wait. We're just going to wait. And Leon, you're going to learn, this is what we call a bracket trade. This is a very, very powerful way of trading. Very, very powerful. And I'll teach you guys how to do this as we move forward. Let's look at a trade that's not got a huge gap on it right now. Starbucks is a trade that is here. So let's look at Starbucks. Notice Starbucks has been in a bearish trend. We'll learn more about trends later, but we've been in a bearish trend. We've bounced out. We hit resistance yesterday. Today, we gapped up and we traded down. This is a bearish candlestick formation. When we get into our candlestick training in level 2, you'll learn more about that, but that particular candlestick formation is what we call a dark cloud cover. It's a bearish candlestick formation. The last time we saw that dark cloud cover on Starbucks was right back here, which was right before the bearish trend continued. It is a very bearish pattern. And so recognizing that, even though in Power Trader Sunday night I set a bearish trigger at 72.74, Leon, here's what I can do now. Now that I've got this new bearish signal, and there's more reasons, I've got a moving average, which I've not taught you yet, Leon, but we will learn about that in class 6. This bearish dark cloud cover occurred at a bounce up into our 50-period moving average. So with that having happened, what we can do is we can tighten this bearish trigger, and now I can come on up here and I can say, at the very least, if I move, come on, chart, there we go. If I move below yesterday's low, about 73.40, I can re-enter a bearish trade on Starbucks. So I can tighten that trigger even further. And again, Leon, we'll work on these triggers moving forward, but this is the way I like to trade it. I like to give it room for the intraday volatility, but as I start to get the trade set up, we'll start to tighten the trigger so it will move into it in the appropriate manner. Does it make sense? So, ladies and gentlemen, 73.40 becomes a new bearish trigger for us here on Starbucks. Does that become a long or a short trade? Now, if Starbucks comes down, we say about 73.40 would be a great place to consider a short trade. Where do you think your target's going to be? If we went short at 73.40, are people paying too much for Starbucks? Well, apparently, because the selling pressure is starting to drive it down. So where would our next target be? Well, certainly $70. That's my main target. That's my primary target I've got. Then we've got the more recent, just recently, last week, we stopped at about $71. We found some support here. So we're going to watch this. And when we get to $71, we're going to be saying, is it going to stop again? And hopefully it doesn't. It goes right down to our target. But what if it trades down to $71 and we get a little candle that looks something like this? Well, we probably need to get out of the trade because the trade's starting to turn around even though we did not get to our target. We'll learn more about those techniques moving forward as well, but you guys are getting the ideas. Do you guys have a pretty good idea now about buying stock long and selling stock short and when we would sell short? This would be a great time for some questions. However, I want to... Let's see if I've got a good bullish trade set up for you. I don't think I do because the market's been so bearish. We had some counter trades that we could have tried to take. I'm just looking for one that would be fun for us to set up here. And unfortunately, they're all pretty risky bullish trades. Caterpillars is about the best one. If I had to pick a bullish trade, it might be Caterpillar this week. And my trigger is going to be about right here. Here's why. Caterpillar's had a major sell-off. We sold off into support, which was my target. That was our primary target we'd been going for. We bounced out of there with extreme bullish candles here. And as we start to bounce, you're going to learn later in level 2 that this is a double top. And when we break through the double top neckline, which you see right there, and we bounce, most of the time we come back to that neckline. So we can predict this as a counter trend trade. I don't like to take counter trend trades, but this is still a predictable one. And we can say if the stock keeps bouncing up out of here, I messed that up. See if I can scoot this over. If the stock, I'm just going to have to delete that one, start over. If the stock keeps bouncing up out of here, about $97, we're going to be able to re-enter this trade as a bullish trade, $96.82 or so. We can trade this up to about $100. And when we get to $100, you better be ready to take your profit because it's going to happen fast. What will happen with this trade is if it keeps going higher in the next day or two, we can trade that up to about $100, and when you get there, close your profit. So we're going to buy here, buy at 96.82 with a target of $100, and when you get there, you'll take out your $3 per share profit. Does that make sense? Would I call that a 50% retracement? Well, we would call it a 50% retracement if it retraces 50%. You can take this measurement right here. That would put the 50% retracement is right at $100. It's at 99.97. So yes, Tim, that would effectively be a 50% retracement right there. And that's a very, very logical spot for Caterpillar to retrace to. Yeah, we're getting a little bit ahead of level 1 material, but absolutely. That's the idea there. I know I got a lot of retake students here, so some of you have already been through the advanced stuff, but for those of you who are brand new, I don't want to overwhelm you with information. All right, let's talk about setting stops. Let's talk about the stop process, and then I'll do some more Q&A here at the end of class. What is a stop order? For those of you who are not familiar with a stop order is an order that protects your capital if the trade goes bad. Protects your capital if the trade goes bad. So here's what happens. If the trade moves in the wrong direction, the stop order is in actuality a trigger. Okay, we always call it an order, but the truth is a stop is nothing more than a trigger. And what it does is it says if the stock hits this price, then trigger this order. And normally that's going to be a market order, and it will sell your position or buy to cover your position depending on the type of stop you used. So let's look at this Goldman Sachs trade. And if you're looking at Goldman, let's say we're bouncing up off a support, as you see in the picture here. So are you going to buy long or sell short, Leon? What do you want to do here? Buy long or sell short? And I'm picking on Leon because he asked a question, but I could pick on the rest of you. I'm going to pick on Sean Tate. He's sitting there all quiet. He never talks. Sean, what do you want to do? Buy or short? Rand says he wants to sell short. Rand's ready to sell short. Roxanne wants to buy. Leon wants to buy. I don't know what Sean wants to do. I think I put Sean to sleep. Robert says he wants to buy. Rand, I'd like to know why you want to sell. I'm just curious. Based on the picture you see here, why are you ready to sell? Okay, Rand's argument is he sees a strong resistance line right here. Okay, it's not drawn on the chart, but that's what Rand sees. Okay, the truth is, if Goldman Sachs continues higher, it's a very logical buying opportunity. And if Goldman Sachs turns down, it's a logical shorting opportunity. At this point, we don't actually know. But let's say you buy long. Let's just go along the assumption that you buy long here. If you buy long and Goldman goes up, you're happy. If Goldman comes down, you're very, very sad because it's not what you were expecting, right? So how can we protect ourselves? The answer is a stop order. Where we're going to set the stop is we're going to set the stop below support. Why below support? Well, we're going to set it below support because that's where we know the trade has gone bad. Okay, so let's say that Rand is correct. Rand sees the resistance here, but no one else saw it. Everybody bought long except for Rand. Rand comes in and he's shorting it. And before you know it, the stock is not just sold back to support at $90. It breaks below $90. Now what? Well, now we know the trade has gone bad. So what do we want to do? We want to get out of the trade. Now, you don't want to be sitting at your computer, twiddling your thumbs, second guessing this. You want the machine to do the work for you. And so you're going to come into your broker after you place your trade, and you're going to set that order. Here's how it's going to work. Once you've got your positions in place, they've already been filled, you can click on that position, and you'll usually get a drop-down menu. Every broker is a little bit different. You'll need to reference your own broker's training videos to figure out how they do it, but they're all going to be basically the same idea. You'll click to sell the position or click to add an order to it, and then the order form will come up. Now, notice we were long our QQQ trade, so if we want to make this a stop order, it's going to be a sell order, but the price type will be a stop. Now, what that does is it says to your broker, if the price hits my stop price, which in this case we set accidentally right at the bid price, but this was just an example, you'll set it below that. So let's say that you set your stop price at $63.18. Then here's your order summary. We're going to sell our shares of QQQ at the limit price of $63.18. This is a limit order. Let me see where I went. I think I got the right. There we go. There we go. Sorry, I just forgot to push my slides forward. Here we go. It's the sell order, sell action, the stop. There I moved the stop below the price action. You see that at the market price with a stop of $61.80. Now what that means is if the QQQ drops down to $61.80, it will trigger that trade and sell at a market price. That's what the stop order does. Okay, so if we click over here to the preview screen, you'll read this. Sell at the market price with a stop at $61.80, duration for the day. We normally would probably want to make that a good till cancel. It says you can place that trade. It also warns you that this is your first day trade because I did this all at one time. And then you get the rest of your order form there and you click on place the order. All right. Now, once you've done that, you can look over here in your orders and you'll see that your sell order, your sell to close, is pending because it's a stop. You see this? So it's a stop order. It's still pending until the order is actually executed. Make sense? Now, we do have, to walk through these orders in a more specific broker-specific format, I do have some videos on the membership area that you can look through for each broker, and whichever broker you're working with, you can go through that process. So I don't want to try to, I can only make it so broad in the overall class. You guys get that, but if you want a more specific broker version, we do have a specific video set up for those. All right, let's talk about the bullish version versus the bearish version of the stop. In a bullish trade, the stop is going to go below the trade, so we will typically go below support, and that's where your stop will sit. And in a bearish trade, your stop is going to go above the trade. Obviously, if we're bearish, let's say we've shorted the trade, you want the stock to come down. So if the stock starts to go up, we're in trouble. We need to get out of the trade. So in a bullish trade, the stop goes below the price. In a bearish trade, the stop goes above the price. Okay? Now, here's what I want you to do for your homework. If you've not done this, get over into your virtual trading accounts and practice buying stock long and practice selling stock short and practice setting a stop. And I want you to do all that in your virtual accounts. And you're going to say, well, how do I pick a stock? Just go pick a stock. I don't care which stock you pick. Just go pick one. It's all about taking action. It has very little to do with making money in tonight's class. We'll get to the making money part as we get into the next couple of classes. But as of now, I just want you to go get the experience placing the orders themselves, okay? And then once you've done that, it will be easier when the time comes to actually do it as part of a strategy. If you're not comfortable working with your broker, or if you need to get more specific videos for your broker, there's an additional bullet point for your homework. Watch your broker-specific videos. This assumes that you're not familiar with your broker. If you're familiar with your broker, you don't need to do this. But if you're not familiar with your broker, if you're one of the 25 or so that I've got here that have never traded, you really need to go get familiar with your broker. And I'm not going to take class time from everybody to do that as a whole. So I want to encourage you to just go watch those videos. We've got some in our membership area. I've got some new ones that we're making. And pretty much every broker that you're going to work with is also going to have their own videos that will walk through any of those basic things like placing a short order, placing a basic order, etc. So I want to really encourage you to do that. Please do that before the next class. You're going to get behind if you're not comfortable with that. And again, I want you to understand tonight's homework is not about making money. It's just about going and taking the action so that you understand it. Because in the next class, we're going to start putting more timing to the trade of when we get in, when we get out. And in the following class, we'll start to put some systemization to it. And then we'll start to create trading plans with it. All right? All right, if there's no additional questions, you guys have a wonderful evening. Happy trading to all of you. I'll see you Thursday night. And until then, happy trading. Good night.